72% of our nation's total electricity consumption comes from commercial buildings. But because of outdated equipment and poor building design, 30% of that energy is wasted. Now, energy costs for commercial property owners is typically the number one or the number two cost that they incur, and it's just to provide basic services like lighting, heating, and cooling. But those same property owners, they're being faced with rising electricity prices, which is actually increasing the already high cost of operating their buildings. Due to today's economic climate, property values are declining, while at the same time, occupancy rates are going down. If we were to be able to capture all of the potential commercial energy efficiency opportunities that are out there now in the marketplace, that economic savings would have the value of $290 billion in net present value. But the problem is, commercial property owners don't have the budget to invest in energy efficiency measures. The high cost of that capital is a barrier. So I'd like to present to you Nexco Energy Solutions. We help commercial property owners adopt efficiency measures that will reduce their operating costs while at the same time providing our investors with competitive returns and creating business value for the service providers that we bring into our partnership. And it's a pretty simple model. We essentially work as a middleman, sitting in between the investment community and bringing together commercial property owners and the project opportunities that they have as a resource. And we also bring in electrical contractors, HVAC engineers, and architects to help us design, install, and maintain these projects. This model is a hybrid value model. Everyone that's a part of it has value delivered to them. The value we deliver for investors is on average a 17% ROI in roughly a 3 to 5 year payback period. For the customers that we serve, we can help them realize savings in month one at roughly 30% of current operating costs. And the project providers that we bring in, we provide them with a pipeline access to new customers for acquisition and long-term retention. Now, how is an energy efficiency project structured such that it can actually deliver returns? The kind of returns that we can use to pay back our investors. Well, an easy way to do it is to write the contract for the project as an energy savings agreement. So what we do is you have a commercial property owner that has a set number of costs each month for the energy resources required to run their building. What we do is we finance 100% of energy efficiency equipment, and we reduce their costs by, say, 30%. Well, we then split that cost savings with the property owner. We take the cost savings and we pass them on to ourselves for a management fee, but also paying back our investors. When the project is over in roughly 3 to 5 years, the customer realizes 100% savings. Now, this model works. It's worked with large ESCOs for over 30 years. Currently, they operate in a $6 billion industry, and that industry is projected to have revenue growth into triple digits, so that by 2020, it'll be a $20 billion industry. And they're big players, companies like Johnson Controls, Siemens, and Honeywell. Well, even though you've got these big players in this market, in this huge market, they're really only hitting 5% of that market. There's a whole other 75% that's available. And here's why. The big ESCOs, the energy service companies, they target customers like municipalities, universities, schools, and hospitals. They call it the MUSH market. And the reason why they target those customers is because they represent long-term tenants that they can rely on for payback. They're also cash-strapped entities who are desperately seeking solutions to reduce operating costs, so the ESCOs lock them into 15-year contracts. So they've been doing it for a while, and they're doing well, but there's a large part of the market that's underserved. These small to mid-sized commercial property markets. And that's what Nexco seeks to tap into. But it's not easy, because those projects are in high volume all across the United States. And because we're not a large company, we need to find project financing through relationships we build with investors. The costs of acquiring that capital and the transaction cost for funding each one of these projects would be enormous. Too much for one company to take on. So what the market needs is a business solution to actually aggregate these projects. so that you can put a commercial energy efficiency project in front of an investor as an investment vehicle that has only one transaction, but actually represents funding for multiple projects. So at Nexco, we're going to be targeting commercial properties that are privately owned in between 50 to 200,000 square feet. That gives us a market size of about 40 billion square feet and just under 4 million buildings. We're going to enter this market starting with lighting-only retrofits. Lighting efficiency projects have a quicker payback period and often a higher rate of return. And the idea of investing in energy saved is something new, both for customers and also for investors. So we think we can capture a larger portion of the market share if we begin with lighting. But we'll then leverage that customer base and begin selling them whole building retrofits farther down the line. And we'll also leverage the investor base that we begin to build trusting relationships during those initial years in which we enter the marketplace. So let me show you a little bit more about how we structure the capital and what the investment vehicle actually looks like from the financing side. What we do is we create a special purpose entity. We'll file it as an LLC. And that LLC is actually a company that represents maybe a half dozen or even a dozen energy efficiency projects underneath it. The advantage that the LLC opportunity provides is it enables Nexco and our investors to go in with equity financing versus a debt investment. This is something that will help us attract investors because it meets their current criteria. So the money from the LLC then goes into those numerous energy efficiency projects. The energy savings, we're going to be taking a portion of them, keeping some for ourselves in management fees, but then passing along the rest to our investors, and that's how we create the value. With that LLC, we're reducing the transaction costs on multiple projects, we're offering up the equity investment, and we're also taking additional measures to secure these investments. Energy efficiency equipment is actually pretty difficult to collateralize. Much of its value really only exists once it's inside the building. So investors are looking for risk mitigation strategies, and here's what we're doing. I'll touch on it briefly. The LLC actually owns the equipment, so it becomes an asset. The utility bill can also serve as collateral. The LLC will take partial ownership over the customer's utility bill specific to the technology that we've deployed. So if we've replaced the lighting inside of a shopping mall, we can take ownership over the portion of the utility bill that's specific to that lighting. Those are our two risk mitigation strategies. Let me show you briefly a little bit about how these projects were performed. This is a pro forma that represents a lighting retrofit in southeastern Florida, an exterior parking lot. It's a $255,000 investment in which we're returning to the investor over $300,000. The payback period is 2.1 years, and it's got an internal rate of return of 40%. For the customer, we're saving them over $1 million in the 5-year contract period. Projects like this and a model like this sounds really good. When I first heard about it, it sounded like a home run. But the truth is, there's elements out there in the marketplace that will inhibit the success of the business. State and federal rebate and incentive programs for commercial energy efficiency service competition, they are also a solution to help commercial property owners address the high upfront cost of capital, but we really don't think anything can compete with the 100% financing that we'll offer to the market. Competing ESCOs. If these large ESCOs do find a way to take their big businesses and scale them down through a model that can actually tap into the small to medium-sized properties, they could represent a threat to the health of our business. Investment vehicles, anytime we sit down in front of an investor with one of our projects, we're competing against equities, corporate bonds, all the other financial instruments that they can play with in the marketplace. And finally, an exchange platform. Until there's a place where an ESCO like Nexco can take a commercial energy efficiency project as an investment vehicle and put it out on a true exchange platform where we have broad access to a large investment community, the type of growth in the marketplace that we're looking for really won't be able to take place. So hopefully you've got a better sense of the kind of business that I've been thinking about for the past 3 months. I think it's viable. What I like about it is that it's a hybrid value chain, providing value not just to the company that I started, but to the companies and customers that I partner with. But before I leave, I want to tell you about the real opportunity of this project, because it's not about spending the last semester of your MBA coming up with a viable, revenue-generating business. It's about doing something that helps foster the development of a clean energy economy in a nation that desperately needs it. 17% of our greenhouse gas emissions come from commercial buildings, and I want to do something about that. The retrofit projects that we're talking about require construction materials and labor. From January through March of this year, the unemployment rate in the construction industry in the US was 26%. What we need is businesses that create green jobs, and I'd like to do something about that as well. Thank you.